What's up, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is August 16th, 2021. Please go ahead and click that like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to talk about the price action in the indices. We had some wild action today. Let's jump into it. Quick first disclaimer, nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it, team. Okay, so S&P 500. All right, let's go through the box scores first. SPY ETF up 0.24% for the session. We had the NASDAQ QQQ finish up 0.04%. IWM small caps finished down 0.93%, our big loser for the day. And the Dow Jones closed up 0.33%. So S&P 500 overnight, let's take a look at the hourly chart, because I think this tells the story pretty well. So overnight we had a bit of a sell-off. We pulled back to this weekly value area high right here at 4,441.25. And trading started, we opened up, and within the first hour of trading, so this is 9 o'clock to 10 o'clock, this candle right here is 10 o'clock to 11 o'clock, we had a pretty significant sell-off, and we jumped into this weekly value area, and it looked like, okay, we might just plummet into the abyss here. We did have dip buying that occurred throughout the entire session after that though. So you can see this candle at 11 o'clock, boom, big green candle to the upside, and so on and so forth all the way up until the close. One thing that I thought was very interesting, I actually did not think that this dip buying was going to go as far as it did, to be honest. I saw that this green candle occurred on much lower volume than the red candle before it did. And I was like, hey, maybe this is just a little feeble bounce. Maybe we're just going to roll over. This will be the start of a new downtrend. But yeah, we had nice follow through on the S&P 500 all the way up until the end of the day. So yeah, pretty crazy price action. Let's jump over to our NASDAQ. And let's pull this up. There we go. Yeah, so NASDAQ, same deal. Looking at this right here, our monthly value area, we fully penetrated this monthly value area high, and we pulled all the way. We undercut the low from 2 days ago, so that's pretty wild. Then we ended up pushing up throughout the day, same exact deal. Let's pull up the hourly chart here as well, and you will see that the NASDAQ made it all the way up to this weekly value area high. Did it decisively break through to the upside? No, it did not. But still, pretty crazy that, boom, we crossed right below this weekly value area low, plummeted right below it, and then, those dip buyers came in and auctioned us higher. And one thing I've noticed about this price action over the last 2 weeks is that realized volatility is picking up in the market. And what I mean by that is, like, a lot of times, when you have, a sell-off or a down sequence in the market, usually there's a bunch of tremors beforehand. I would say this is kind of excessive in terms of how many tremors we're getting. But yeah, usually it's, you start to get a couple bumps in the road, the dip is bought, but then you can end up getting that sell-off where, oh my gosh, we break through the technical levels and then the dip does not get bought. So we will have to see what happens. But yeah, Russell as well. Russell also, this one lost the 20-day simple moving average. Is this, a good candle? Absolutely not. But we did hold this monthly point of control, or at the very least, we're trading like right under it. So is this, a good thing for the Russell? This thing still looks very weak, but it's just not rolling over. Let's jump over to our Dow Jones. Dow Jones was the strongest of the indices for the session. And Dow Jones, check this out. So we hit our objective up here at 35,547. But yeah, we undercut that 5-day EMA and we pushed higher throughout the trading session. Let's jump over to our market breadth. Market breadth. Let's go right here. Market breadth closed positive in 3 out of the 4 indices. When we opened up for the trading session, this breadth was totally different. At one point we had, like 30% advances across the board. It was very bleak. And throughout the day, more of these stocks, continued to turn on and go green. So our best index was the Dow Jones with 60% advancers. Our worst was the IWM, horrible. And then everything else was somewhere in between. So for, a green day in the market, is this like really good breadth? No, not really. Everything is between, it's a very mixed bag, just barely positive. See, although this is, the market closed green, this is definitely not it's not really the most convincing thing in the world to me. Finviz heat map, Apple, really strong day. Tesla, really bad day. There's an investigation being brought upon them for their autonomous technology. And that just, I think, combined with some overall tech weakness, really brought this name down. So we had Tesla weak, Apple very strong. And then these other FANG names really just came online throughout the day. Let's pull some of these up. So we have Tesla was the one that really got hit. But even Tesla pulled back to this monthly value area high and bounced off. And we closed pretty much right on that 20-day simple moving average. That being said, though, we do now have a bunch of underwater longs up here, about 2 to 3 weeks of underwater longs. So we'll have to see how Tesla progresses. But Apple was a nice relative winner today. And Apple broke out very decisively. We actually retested the 20-day simple moving average. We undercut it. And then we really just rallied pretty hard throughout the remainder of the session. So that is a new all-time high for Apple. So I think Apple's kind of like the beacon of hope for the S&P 500 and the NASDAQ right now for the moment. So we'll see if Apple, can just continue to the upside all the way up to this R1 pivot level of 154.73. And then Microsoft pretty strong as well. Yeah, very mixed bag. Let's jump into the sectors. Looking at this sector sheet, is this another thing where look at this. Does this look very risk on? No, it really doesn't. No, if you look, best performers for the day, we had healthcare stocks of 1.14%, a very defensive area of the market. Medical devices, same family of stocks up 1.01%. And then we had, what was the next big winner? And then utilities up 0.61%. So we had the most defensive areas of the market that were rallying. Meanwhile, we had solar stocks selling off, cannabis stocks selling off, Chinese stocks selling off, emerging markets sell off, autos sell off, innovative technology sell off. So is this risk on or risk off? To me, it seems like this is a pretty risk off tape, even though we're seeing green at the index level. Style factors are going to show you the same exact thing. High beta stocks were down 1.37%. That was our big loser. Then we had momentum names down 0.81%. Best performer on the day was defensives, up 0.8%, and quality up 0.59%. So this is, if you're just looking at the headline index level, you don't do this every day, you might just think, oh, this is just, just another normal day, right? Whereas if you're really digging into these every day like we do, you can tell there's sort of like a character shift going on in the market. So in terms of, my trades, how I'm postured. So what I did for today was I closed out of a bunch of positions. So I really, Friday I started to scale out of some positions. And then today I really took that to another level. My VVIX risk indicator finally flashed 4 white candles. So let's take a look at that. Let's pull that up. Here we go. Yeah, and this just confirmed, and this is really just showing us when the VVIX and the S&P 500, when they start to become very correlated. Typically when you get these 4 white candles in a row, that means there's an above average probability that we have some sort of, short to intermediate term top in the market. And, basically the risk is just elevated. So my game plan into today was okay, today might be the day where the signal triggers. So let me, if we get some strength in the morning, I'll just sell into that. It'll be perfect. The signal will trigger. I'll sell off into the strength, win-win is perfect. What ended up happening though, sort of, I would say through like a little mini wrench in things, but that's okay. We opened up sort of on our back foot where it was like, oh man, like the market's already selling off. Like we might already be almost like a little bit too late in a way. So right in the morning, I was like, I'm not going to play any games. I'm going to exit some of these exposures. So yeah, I had pretty good winners on a lot of these stocks. Like I had added to my micro strategy for 691 spot 55, closed that out for 715 spot 49. I actually had some Apple that I closed out in the beginning of the session for 150 spot 1. I had paid 149 spot 34. And then I closed the remainder of my Unity common shares for 123 spot 58. I'd paid 122 spot 03. I'd already taken a target higher. I closed out the remainder of my Global E for about like a 25% winner. I closed out my Zim, which I had closed most out on Friday for also a small winner. And then the only position that I did take was I got long some Roblox in the after hours. I like the earnings report and the acquisition that they made. And I love the CEO. Dave Baszucki is the man. He has his earnings call tomorrow morning, and he's just such a good long-term thinker. So I'll probably be on that earnings call, like, just listening into his commentary and how he's seeing the company. But he's definitely a visionary. He thinks of things with like a very long-term point of view. So yeah, I just took some of that long in the after hours. Pretty small position, to be honest. In terms of options trading, so given that my risk signal triggered, I was like, okay, I'm going to enter into essentially like a tail hedge. I got long some SPY 443 puts for a swing trade. I also tried scalping some puts for a day trade, and I stopped out of those because we ended up getting this really nice trend day to the upside in the S&P 500. Twitter got very oversold, so I took some calls in Twitter. The 62.5 strikes. I had been long the January 2022s for Twitter. I closed those out a couple sessions ago because Twitter was having some trouble around the 50-day moving average. Closed those out for about a 120% winner, 130%, I forget. And yeah, so I added some of that exposure back today. And Twitter, you can see this one pretty oversold here, and it put in had a long lower wick on the bottom of this candle, so we'll see how that one does. But overall, my positioning is quite a bit lighter, and for me, I'm not really all that concerned if throughout the rest of the week we have options expiration. Maybe the market really just blows off to the upside, because that's how a lot of these short-term tops occur. Usually it's the market blows past everyone's bearish assumptions, whatever. Everyone goes, oh my gosh, I'm so glad that now we realize that the market will never go down. And then that's typically when something bad happens. And so for me, I feel pretty comfortable with how I've been performing and where I am year to date. So if I sit out the next couple days where I'm a little bit underexposed, I still have my crypto exposure, but if I sit with a cash balance, if the S&P 500 were to go up another 0.5% or another percent, for me personally, I wouldn't really care. And the reason why is because I've been doing this for a long time. So for me, it's like I've been in this seat before where I get a risk signal, I know the probabilities are no longer in my favor, and you just continue to push the envelope the same way that you have been, because you see things going green and you're like, well, I know there's risk, but I see this going up. I could pick up 20 basis points, or like I could pick up 1%, or whatever. You just think, hey, I can keep going. And what's happened to me in the past, and what happens to 99% of traders, is you just see the green and you keep going for it, and then the risk hits, and then you're like, then you're suddenly in all of it, and then you have to take yourself out of those positions. So it becomes really just like a question of what do you prefer? Like, some people, like, I know this is usually like a lot of, I guess depending on your personality type, or maybe if you're a little bit newer or, you know, whatever, if you like sell some of your holdings and the market goes up 20 basis points, you're like, oh my God, like you feel like the world is ending because, you know, the market went up another 20 basis points or went up another percent or, you know, whatever. And maybe you had like a 20 or 30% cash buffer and, you know, you're upset because, you know, you see somebody else on Twitter that, you know, bought calls or something and, you know, you're just mad. But for me, that's just not how I am. Just because I've been doing this for a while, I have the experience. So like for me, it does not matter. And the reason why is because on any given day, like I'm going to be doing this for another 20, 30, 40, 50 years. So I'm thinking like, how do I do my best over the next 20, 30, 40, 50 years? And for me, I know that my system is going to make money over months, years, decades. So it doesn't really matter to me if it's like, you know, if you miss out on like a couple days or whatever. To me, that's just, it really doesn't matter in the grand scheme. So for me, I feel comfortable. And then the other thing too is when you are taking signals and you're using statistics in your trading and you're really trading the probabilities. I think another thing to just be cognizant of that's very important, and this is another thing that 99% of traders will never internalize, and this is why 99% of traders fail. Because they judge the quality of their decisions based on the outcome of the decisions, and that's totally not what you should do. And that might sound a little counterintuitive, but basically what I mean by that is if I have some information at my disposal that tells me, hey, you know, if you put this exposure on, there's only about a 45% chance you're going to win, and there's a 55% chance you're going to lose. Me personally, I won't take that exposure. You know, I'll be like, you know, I'm not going to do it. And the reason, like, I keep going over this, but I've been there before. I've done that stupid stuff when you're just an immature trader and you can't sit out. And that's a problem. That's typically what that means is that you're addicted to trading. And I should definitely do like a separate video on this, but I think most people that trade, they're addicted to risk taking, because every time you take a risk and you put an exposure on, whether it's a call or put, you buy a stock, you get a high. There's literally a high where it's like you want to make money. You get the feeling of like hitting a slot machine, and you get that rush. So for a lot of traders, like the idea of like sitting on your hands for 3 days is like, what? Like there's no way. Like I can't even do that. I can't even think of that. And that's likely, if that's the case, that likely means that you are addicted to trading. Like you're addicted to risk taking. And really, in order to hit the next level in trading, you have to lose that addiction. You can't achieve, you know, high levels of success in this business if you are addicted to trading. Trading's like a drug. And most people, they do drugs and they overdose. And what is overdosing in trading? Overdosing is typically taking a huge drawdown. It's typically blowing up your account because most people can't handle like the psychological aspect of risk taking. So yeah, for me, it's like I've just done that so much. If I know I'm going to do something that has, you know, a 55% chance of losing, I'm at the point where I'm not just going to like hit the slot. I'm just going to go, you know what? Like I'll go to the gym and hang out for a couple days. It really doesn't matter to me. And if I do that and then, you know, I take the 55% probability of winning and I lose that hand, I don't get upset with myself either. That's the other thing. You have to be almost like a machine in a way, or like not like a machine, but you have to understand probability and how probabilities work. Or like if you take something that has a 55% chance of winning, 1-to-1 risk reward, you take it and you lose, that's still a win. If you take something that's a 45% chance of winning, 1-to-1 risk to reward, and you know, win on that bet, that's still good that you won. Like you know, I want everybody to win. It's like I would want that person to win anyway. I hope they do. But that's still a poor quality decision. So like my goal is make the best quality decisions I can make. Because the other thing is I know I'm not going to be perfect either. There's going to be decisions I make that, you know, they don't work out, whatever. So I just know like I'm a very flawed, imperfect person. So for me, it's like I really want to make sure that if there's an edge, I take advantage of it. And especially too, because I run like a service, if I see that the odds are no longer in my favor, like there's people watching what I trade. And I'm sure there's some people that they're influenced by what I do. It affects what they do. So for that reason as well, like I'm not going to be that, you know, gambler type that's just like hitting the slot every time. Like I can't do that. Like there's no way. So that's really just like my thinking around, you know, the markets right now, what I'm seeing. So we'll see how it continues to play out. Let's check out real quick before we wrap up. Let's just look at our flow leaders on VigTech. Alright, perfect. Here we go. Alright, so let's see what was going on today. Flow leaders, we have Tesla in the lead, of course. I think Tesla, you know, this is just like a battleground for options traders. So we have Tesla, and then Target, which does not usually appear on our list. Up here at $1 billion, and Target was definitely a lot of dip buyers came in and they were very receptive to this dip in Target. Yeah, check this out. So we pulled back to the 20-day and we bounced right off. Target is a holding in our trend portfolio at Pristine Capital. Now let's also take a look. So we had Target and then this name PBR. I'm not really familiar with this one. Okay, Petrolio. Okay, I think this is an energy company. Okay, gotcha. Now let's see. And then of course, yeah, we had Apple, AMD towards the bottom of our list. This has definitely moved down a couple slots. But yeah, for the most part, our usual offenders here. With that being said, hope you all had an awesome trading session. I'll see you all tomorrow.